Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Over our 27 years of broadcast, we've had lots and lots of guests, but our favorite guest is you. And today we'll take a look at your questions as we bring you another edition of Ask the Guys on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me as usual, it's our co-host, financial strategist, Russell Gray.
Hey, Robert.
One of our favorite things to do is to find out what's on your mind, and today it's another edition of Ask the Guys. Folks send us in emails from all over the planet, and most of them, frankly, are very specific, and we can't answer them directly, but sometimes we can point them to resources and things. But our favorite questions are ones like you'll hear today, which I think lots of folks would be interested in the answer. If you have a question for the Real Estate Guys, all you have to do is go to the website at realestateguysradio.com and click Ask the Guys. Here are the caveats. We are not tax or legal professionals, so don't expect that from us. And two, we don't give advice. What we do is give you ideas and information so you can decide what to do with that. So without further ado, question number one comes from Melvin in Washington, D.C. Hey guys, I'm really interested in getting into the whole real estate investment thing and possibly making some serious moves this year. What books do you recommend for me to read and understand more about debt, taxes, good deals, bad deals, properties, etc.? I'm completely new to this. All right, Melvin, well, that's how we start with your question, because whether you're brand new to real estate or you've just been learning about real estate and you're ready to take action, I think we probably do have some suggestions about some things to read. Now, before we give you some specifics, and I'm sure we'll both have some good thoughts, just understand that reading and learning is necessary, but as the godfather of real estate would say, not sufficient. You can't just read and learn about real estate. You have to turn education into effective action. I remember we were doing a seminar years ago, Russ and I, and a guy came up to me at the break and he said, okay, I've read all of Robert Kiyosaki's books. I've read Donald Trump's book. I've read your book. I've read 2 of Gary Eldred's books. What do I need to read next? And my answer was the purchase contract. You need to get in the game. So you got to get educated. Big fans of it. Obviously, here you are listening to a podcast. That's not enough. So with that caveat, let's talk about some books you might consider. I think obviously the first book is Rich Dad, Poor Dad by Robert Kiyosaki. It's a classic. There's so many great elements to it. Personal development, accounting, a relatable story. So that's like bar none the first book that you'd want to read. I also think all of Ken McElroy's books, while they're excellent, his latest book is called The ABCs of Buying Rental Property. And even though he's written lots of books up until now, this is the most basic start at the beginning book that he's done. When my son came to me and said, Dad, I think I want to invest in real estate. What should I read? At 16 years old, that's the book that Ken gave him and signed to him. So Ken McElroy often comes on our investor summits. Good guy, just came to Create Your Future, the Goals Retreat. I would say I'd start with those two. I'll let Russ rattle off a few and I'll give you some more.
Well, I think books are great. I have a gigantic book collection. I think most people would consider me to be a bookaholic. I collect them. So I love them. I think they're great. I think that having written a couple of books and the amount of time it takes to sit down and coalesce all your ideas and get them in and think them through and commit them to writing, you really do get a distillation of wisdom in a collection of books. But here's what you don't get. You don't get to be in the moment and pick up the attitudes and the habits and the beliefs that are underneath effective action. So knowledge is interesting, but it's a lot more than knowledge. I could show you a book on how to ride a bicycle, and you could read it 1,000 times, but until you get on a bicycle and actually experience it in real time, you're really not going to learn. I remember when Robert Kiyosaki was considering Bitcoin, and he was studying it and trying to understand it, and he finally got to the point where he said, okay, the only way I'm going to get over the hump is if I buy some. The minute I buy some, I will pay attention. And so I would encourage you to invest not just in books, but in relationships. Get in rooms full of people that are actually doing what you want to do, and listen more than you talk. Offer to help when you can, and then find out, of course, what they're reading and what they're listening to, but watch what they do and watch the way they think. And then at some point, do a small deal to get into a real live deal where if everything goes horribly wrong, you are not destitute. You haven't bet the family farm on your very first deal. But once you get in and you begin to work with your team, and I think that's one of the things you'll pick up in Kiyosaki's books and training, is investing is a team sport. You're going to have a good CPA who understands real estate. You're obviously going to want to have a good broker or somebody who's helping you find the deals. You're going to need to have a great property manager. And I always make the argument you want to start there, because at the end of the day, the rental properties are all about income, and the income is derived from good property management. Unless you're going to do it yourself, or even if you're going to do it yourself, you probably want to have a good property manager. And of course, taxes is real important. You're going to want a CPA who really understands the tax side of real estate, because one of the most appealing things of real estate is tax. And I would say one of the very first people you want to talk to is a mortgage professional, especially somebody who understands real estate investment, because the packaging is a little bit different. The underwriting guidelines are a little bit different. And last but not least, if you think that you want to invest out of state, then go there. Don't just buy something off the internet and hope it works out, but actually go there and meet people. So I would say the people are probably more important than the books, but the books are a great start to learn how to converse with the people.
Yeah, books give you a great thing to have in common and to talk to people about. When you ask people, hey, what are you reading? And they give you good answers, be prepared for them to say, and what are you reading? So you specifically mentioned taxes. I think Tax-Free Wealth by Tom Wheelwright, CPA, is a great book there. I mentioned Gary Eldred's books. His Beginner's Guide to Real Estate Investing is probably a good place to start. Our friend Brandon Turner wrote a great book on real estate investing. There's lots of places out there. The Millionaire Real Estate Investor from Gary Keller. But again, and we'll say it as we've said it, just don't think that reading is going to get you to where you want to be. Reading is an excellent start. Listening to podcasts, even going to live events, excellent start. What you have to do is get into the relationships that will put you in position to profit. Good luck to you, Melvin. And believe it or not, we have lots of listeners that come from your part of the country. Next question comes from Carole in McMinnville, Oregon. Hi there. You just did a podcast on getting a coach, but I'm not sure I heard any suggestions on where to find a real estate coach. Would you happen to know of any we could reach out to? Or maybe you guys are taking students. We're looking for a strategy advisor as we kick off 2023. Thanks. Well, Carole, yes, you are absolutely correct. And we specifically did not mention any coach, because the minute you hear a radio show that's all about the positive nature of coaching, followed by a pitch for a coaching program, it's probably pretty obvious what the agenda is. We have no coaching agenda at all at the Real Estate Guys. I'm sure Russ and I would love to sit and talk to folks about their real estate investing. That just doesn't work in our lifestyle very well, because we're busy guys doing a whole bunch of stuff. But I think the idea of having a coach is something we're both behind. So let's talk about some of the places you could find coaches. Russ mentioned getting out in the world, forming relationships, talking to people, real estate meetups and real estate centered events and seminars. That's a great place to kind of organically find a coach. Now, there are structured coaching programs where you go and you sign up for a coach and you pay money, and every week or every 2 weeks or every month you have a session. Nothing wrong with those, but just like our answer to the books, it's not enough. The good thing about a coach is a great coach will give you the feedback. They'll ask you those questions like, how many deals did you look at this week? How much money have you set aside to invest? Have you talked to a mortgage professional? What is your tax situation, right? They'll help you in that regard. But as far as a specific coaching program, I think the first decision to make is it life coaching, meaning someone to hold you accountable, someone to be there to help you along the way? or is it niche coaching? In real estate, there's lots of different niches, and we know lots of people that specialize in various niches of real estate investing.
I'd like to make a distinction also between coaching and mentoring. We talk about mentoring a lot. I'm a big fan of mentoring. I think coaching is okay. A lot of times you need a coach to get you to do the things you know you should do and hold you accountable. And if you're the type of person that has that kind of weakness, if you will, lack of discipline, and you need that, that's great. But really, your advisors and your mentors are there to take the drive that you have and channel it in a positive direction. So the way we think of mentoring is you're out there trying to get something done, and you get to a place where you're stuck. You don't know what to do next, or you're trying to get something done and you don't know how to get it done. And you have a lifeline. You call your mentor and say, hey, I'm working on this. I'm stuck. I don't know what to do. Call it a mastermind group, a mentoring program, a mentor, whatever it is. People who have already done what you're trying to do, they kind of know the path. You're stuck, but they know the way, like a trail guide, a safari guide, right? A coach is going to be somebody who calls you up, hey, did you do what you said you were going to do? And that's a very different thing. So just understand the difference between those two things. And Robert, I totally agree with you that if you're going to hire somebody to coach you up in real estate investing, make sure they're niche specific. And a great way, because some of these coaching programs can be expensive, so I'm not saying they're not worth it, but another great way is if you're involved in a local club and you're meeting people and you find an experienced investor and you say, hey, if I were to put some money in a deal that you're doing, would you be willing to let me be a fly on the wall and look over and see what you're doing? I mean, as an investor, you would have the right to do that. And so that's a way to learn, again, in the real world. Robert, that's how you learn development. When we first got involved in real estate development, you were a passive investor with an active real estate developer, and you made an investment, but you didn't just send your money away and, kind of invest and forget, but you got in there and you went to all the meetings and you were in on all the conference calls and you asked a lot of questions, and they were very gracious towards you in answering those questions. And that started off your career. And it was really more of a mentoring, but you didn't pay for the mentoring. You made an investment. So there's different ways to get it done. Just be careful, because there is a lot of high-priced education out there that teaches you everything you think you want to know, but doesn't really teach you what you really need to know. Go back to what we said at the top of the show. People think it's about information. It's usually about transformation, meaning you need to change and learn how to be an investor, not just do what an investor does, because you have to think the way an investor thinks. And then it's also about relationships, because when you're in relationships, then you have advisory board, people who can answer your questions. You have people bringing you deals. You have partners you could potentially invest with. And again, I'm a big fan if you're just getting started. The first place to go is get in a relationship with a good mortgage professional. Managing your borrowing power, which is arguably your most important financial asset when you're getting started, especially if you're going to be investing in residential 1 to 4 unit properties. Get a good real estate investing oriented mortgage professional to coach you up on managing your credit profile. So when it comes time to actually do the deal, you're going to be able to qualify for the right loan for that particular kind of property.
And the key point is a mortgage professional that understands investment property, because most don't. Most mortgage professionals make loans to people who live in houses those loans are secured by. Nothing wrong with that. That's great stuff, but that's not what you need as an investor. You need someone that really knows the investment space, and you can network into those kinds of relationships. You asked specifically if we're taking students, and we don't talk about this much on the radio. We have a mentoring program for real estate syndicators. So not just for investors, not for just portfolio folks. We don't fancy ourselves gurus. That's not what we do. We're more journalists bringing you ideas and information. But in our real life, because what we've done for many years is raised lots of money to do projects, some of which we've developed, some of which not. That's kind of our expertise. And so we have that program. And the only time people really ever hear about it is if they decide after they've attended the 2-day event, Secrets of Successful Syndication, to stick around afterwards for the optional session on our Syndication Mentoring Club, then they get to learn about that. So we're very soft sell, if you will, on our program, because we're the exact opposite of what Russ described, which is these programs that are designed to lather you up, get you all excited, get you to write a big check, and maybe you'll do something with it. We're way more driven by the results that our mentees, if you will, get in the real world. And it is so awesome to see the over $1 billion that our students have taken out of the casinos of Wall Street and put into great Main Street deals. So if you want to learn more about that, all you want to do is come out to the Secrets of Successful Syndication. You may be interested in passively investing in syndications. It'd be great to attend the event, or you may decide, no, that's what I'd like to do, is put together those deals. Either way, if you're interested, just send an email to syndication@realestateguysradio.com, syndication@realestateguysradio.com. Learning how to spell that word is the first hurdle to becoming successful in syndication. It's Ask the Guys. Your questions, our answers. We got more when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investors Summit. Simply put, it's the highest level event we do, and the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, then join us next summer. You'll spend an entire week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all begins June 6, 2023 in Ambergris Caye, Belize. Visit realestateguysradio.com and click on the tab that says Summit to learn more and reserve your spot. We'll spend a sun-drenched week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. It's nearly 70% full already, but there's room for you if you go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys and an all-star faculty on the 21st Annual Investors Summit on Sand.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Heard every weekend on this great radio station all the time at realestateguysradio.com, and of course, all of your favorite podcast outlets. It's Ask the Guys. We like to do this show every 8 to 10 weeks. We get a big list of questions that come in. We kind of rifle through and see the ones that we think would apply to lots of different listeners and do our best to answer those on the air. If you have a question for the Real Estate Guys, if you go to the website at realestateguysradio.com, you'll see a little button that says Ask the Guys, and you can ask your question. This question comes from Brandon in Grand Rapids, Michigan. So guys, I'm looking to get into the real estate investment world. I don't have a lot of money. However, I have a lot of wealthy people I work with for my day job. I'm thinking of making the ask to have them invest into a 4 or 6-plex. In fact, there are some being built that I'm interested in. These are new buildings that are being sold individually. My thought is to get investment dollars to buy 4 to 6 of these buildings. I would live in one of them, then set up lease-to-own contracts for about 3 years so I can gain good tenants, revenue, and manage the property myself. I think it might be a good time to do it given interest rates and have a more defined timeline for the investors to exit. Thoughts on that strategy? Well, we got a lot of thoughts on this strategy, Brandon. First of all, we're big fans, as we just talked before the break, about raising capital to do deals. And the premise is most real estate investors invest on the side. They get up every day, go to work, doing something hopefully that they love. They live below their means. That gives them some extra capital. They invest it in real estate along the way, and in 5 or 10 or 20 years, they have a nice little financial wall built around their family because of their real estate holdings. Love that. What happens, though, is that limits us as to when and how much real estate we can buy. I can only afford this much, or I can only qualify for loans for this much, and then at some point, I got to stop. Or do you? If you decide instead to put together deals like you're talking about, find some investors to come alongside you, now you're no longer limited by just your own money and ability to qualify. That's the brilliance of real estate syndication and why we're such big fans. You don't have to only be limited by your means. Now, the specific deal you're talking about, we obviously don't know Grand Rapids, Michigan very well, other than it's a good place to get good beer. But what about 4 units, 6 units? Those are two very different types of buildings that Russell addressed here from the financial point of view. That could be a way to go. But already I see you've got a lot of specific thoughts. Lease to own. Who leases to own a 6-unit building? Well, you'd have to be an investor, not someone who wants to live in a unit and rent out 5. That's an exception. So while I like lease to own for single-family houses, I'm not sure it works for 4 to 6 units, and we can talk more about it, but I love the way you're going. I think you got to refine your strategy a little.
Yeah, here's the thing I like. I like the fact that you're thinking, hey, I don't want to wait until I've saved the money. I'm around money. I can raise money. Syndication helps you get started sooner, just like it helps you go bigger, faster once you've got started. You recognize that what you're bringing to the party is the hustle, and the people who are too busy earning the money, hopefully will look at you, presumably a young man with a lot of hustle. You got a good brand, a good reputation, and they'll trust you to do the work, at least in terms of your ethics and your commitment. What you got to do is convince them that you have the ability. So you want to make sure that you have built a team of advisors or mentors or people that you're involved with that are experienced in the asset class that you're going to be working in, so that you can sell the entire team and not just yourself on who's going to produce the results. To Robert's point earlier about the difference between a 4 and 6 unit property, the difference is financing. In residential properties, which I presume that these are, it would be residential 1 to 4 is considered one category of lending, and you would deal with a residential mortgage lending person, presumably somebody, as we've alluded to earlier, that is experienced in working with investors. That deal is going to depend on your personal credit score, your personal debt to income ratio, your personal balance sheet, and or that of your partners. The loans are a little bit better when you can get them, but it does rely upon you. Now, the other side of that is when you go from 5 units and above, now you're into the realm of commercial lending. And the challenge with commercial lending is the underwriting, the appraisals, all of that is a little bit more expensive. The property does the qualifying, not you, but often you have to have experience. And when you do a low number of units or a smaller dollar value property, a lot of commercial lenders aren't interested in you. It's not big enough. But they could take several of these properties and put one master loan over all of them and say, if you had 6 unit buildings, let's say, now you've got 36 units. So in that case, you'd want to be working with a commercial lender, and that is a different animal. So the first thing is just understanding the difference in the financing. If you do decide to bring in private capital, is absolutely positively essential that you follow the rules of syndication, or you might find yourself on the wrong end of the Securities and Exchange Commission, and that would be bad. We obviously spend a lot of time helping people navigate this particular area because that's the main thing you have to worry about when you're syndicating. If this is something you're seriously interested in, probably the best investment you could make is to come out to the secrets of successful syndication. It's a modest investment. You're going to be in a room full of great advisors and people who have been there, done that are happy to talk with you about their experiences. Nothing gets sold there. It's not about making deals and pitching deals. It's just about learning the information and building some relationships. The other thing that I think is great, Brandon, is that you're thinking about entrance, hold, and exit. I'm not sure the whole lease-to-own thing really is a match. I think I agree with Robert on that. But the fact that you're understanding that you've got to get your investors back out, you're not just getting in, is a good sign that you're thinking the right way. You're caring about the investors' well-being, which is, I think, the most important attitude anybody can have who's raising money.
Well, actually, that's one of the reasons I don't like the exit strategy is as soon as you bring on an investor, your mission is now to make sure that your investor gets a great return, has a wonderful experience, and wants to go do more with you. It's not about what you want. It's never about you. It's about the investor. And if you're saying, I want to get into the contract on these properties and then set up a lease option so that they get sold in 3 years, what you just did is took away all that income from your investors after 3 years. Now, maybe that's fine. Maybe you sold at a profit. Maybe that's part of the plan. Maybe they only want their money working for 3 years. I'm not saying that's bad. It's just you really do have to think about, what does the capital want? What is the capital after? When you step over that line from investing in just your own account to investing with other people's money, it's not just the legal that kicks in, which it does, as Russ talked about. It's not just securities law. It's also you are gearing the investment for the investor. And that also brings up the challenge of, I don't know of a syndication at any kind of a high level where the syndicator's living in a unit and managing the property themselves. I'm not saying you can't do those two things. If you wanted to buy a property, say a 4-unit property where you could qualify for the loan as an owner-occupant, and there'd be reasons to consider that, and live in one unit and rent out the other 3, I see nothing wrong with that. But to ask someone to put millions of dollars into a building you're going to live in, unless you have a storied background in property management, I'm going to submit you're not the right person to manage it. If you're going to buy 6-unit buildings and have 36 units, then 100% you're not the right person to manage it. You need a professional property manager, not just because that makes better professional sense, but because the lender's going to require it. A lender in that kind of a deal is going to say, listen, you need to have a third-party, reputable management company that we vet. So the world changes when you pass 4-unit buildings in a really great way. You can't probably get to the wealth you'd like in your life just investing in little houses. I mean, over time, the tenants will pay down the loan and you'll have more equity and your cash flow will increase, but that's just a slow, long way to get wealthy. What raising capital does is puts the furnace on. It lets you raise money, it lets you do more deals, it lets you have a greater impact, all those things. So I think part of what you're saying here, Brandon, is awesome. Your direction, your motivation, you've got some specific ideas and a market, but part of it is small thinking. You're going to live in a unit, right? Why not have a professional manager manage it, make you so much money that you can live anywhere you want? So it's just redefining your thinking a little bit.
Yeah, I just did a talk out at the Residential Assisted Living Academy, and I go out there and I talk for them about 8 times a year. And I teach syndication. And the first thing I suggest to everybody is you got to think bigger. The whole point of syndication is to learn to think bigger and to learn to get things done through other people. In this case, Brandon, I think that you may benefit from getting into our special reports library. If you go to realestateguysradio.com and click on resources, you'll see the special reports library. There's lots of free content in there. And in our provider network, you will see a couple of people that you might be interested in. One is Stephanie Riley, and she handles residential mortgages for investors, and she can certainly help you understand how well qualified you are right now or what it would take for you to become well qualified. And the other one is Anton Matley with Peak Financing, and he does commercial lending. He's the kind of person who would be financing properties of 5 residential units and above, small apartment buildings, if you will. And when you consult with them, they will teach you what you need to do to be able to acquire the financing. And that's one part of your capital stack. The other is attracting the equity, which you've already instinctively realized, hey, I got people in my network that have money that might want to put it to work. And the other thing is, I think, make the investment. Come out to Secrets of Successful Syndication. As I said, syndication at realestateguysradio.com. It's coming up in March. Give you an opportunity to talk to a lot of people who started out right where you're at with a dream and an idea, seeing the possibilities, not knowing how to put all the puzzle pieces together. A lot of people in that room will have done that, and you'll have ample opportunity to get into good conversation. It's always good to be in the right room.
Brandon, we highly encourage you to continue searching, and congratulations on getting the bug to invest in real estate. The answers are out there if you'll keep searching for them. It's Ask the Guys today. Your questions are answers. If you get our emails, you probably know that our friend Kyle Wilson just released a brand new book. I was thrilled to write a chapter in that book. When we come back, you're going to have a chance to win a copy of that brand new book on Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from May 5th through 8th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me May 5th through 8th in Ambergris Caye, Belize, as we study the market, learn about sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize May 5th through 8th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Chris Martinson, author of Prosper, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you ever wanted to do bigger deals using other people's money, or if you want to learn to passively invest alongside big deals with big potential, well, come on out to the Secrets of Successful Syndication, our 2-day workshop on putting together bigger deals and investing in them. It's always a blast, and the people that show up are amazing. You can get all the details on our website at realestateguysradio.com under Events. It's Ask the Guys today. Your questions are answers. Before we get back to our list of questions, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question. In a few minutes, I'll give you the question. Your mission is to send us the answer, along with your name and your physical mailing address, to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. First person that gets the right answer gets this awesome new book called Next Level Your Life. It's a collection of great stories by folks like Kyle Wilson, Tom Ziegler, Robin Binkley, Wagner Nolasco, Shannon Robnett, and yours truly. That could be yours if you know today's real estate trivia question. Last week on the program, it was Clues in the News, and we asked this: which is the coldest state in the U.S.? Well, here we are in winter, and we're all thinking about it. Well, the answer, and it may be obvious, is the grand state of Alaska, where the average temperature year-round is 28.1 degree Fahrenheit, followed by North Dakota, with an average temperature a lot warmer, 41.1, and Minnesota, where the average temperature is a scorching 41.8 degrees. How cool is that? Here's our real estate trivia question for this week. Where is the largest apartment complex in the United States? Yeah, I mean, some of us own 200-unit buildings, 400-unit buildings, 550-unit buildings. Well, there's one that is much bigger than that. In fact, it's the largest apartment complex in the U.S. Where is it? If you know, want to guess, or maybe you live in one of the apartments, send your best guess to trivia@realestateguysradio.com. You'll need to give us your name, the answer to the question, and your physical mailing address. If you're the first to get it right, you'll get this awesome new book, Next Level Your Life. You can find out more at nextlevelyourlifebook.com. That's today's real estate trivia question. It's Ask the Guys. We love when you have questions you'd like to ask us. All you have to do is go to the website at realestateguysradio.com and click Ask the Guys. Our next question comes from John in San Jose, California. Hey, the Real Estate Guys. Hope things are well in your world. I'm aware that over the years, providers have come and gone in the Real Estate Guys universe, and I believe that people who stood up to the test of time with your team's philosophy is a great place to look for potential future providers. Let's just stop for a second. In our world, a provider is someone that helps a listener live out our motto, education for effective action. So if you hear an advertisement on our show, we don't think of those as advertisers or sponsors. Those in the real estate guys world are providers. They can provide services that you might be interested in. Some of the folks we've mentioned already are providers of services. So obviously, John's been around us a while. He says, think of the Yelp review or Amazon review in the investment world, except being much more impactful than a review of the food in the restaurant next door. So, is the best way to see whether someone is still in good standing with the real estate guys is to check the resource section and see if they're still listed? Just want to confirm my methodology. Thanks, and Happy New Year to all of you at the Real Estate Guys radio program. All right, John, this is a great question, actually a world-class question. Over the years, like everybody, we've had a bunch of relationships. You may not know this about Russ and I, but our number one core value is relationships for life. We never enter a new relationship if there's any reason to believe we will not be in that relationship for the rest of our natural days. Now, in reality, even though we felt that way when we entered the relationship, things do happen. And so you can pretty much assume, John, that if there are still providers with reports and episodes and things like that in our Real Estate Guys library, then we're good with those folks. Again, it's not for us to decide who's right and who's wrong, but I'll just say this. If you used to hear from or see someone on our site or on our show and they aren't around anymore, there is probably a very good reason.
Yeah, we have to be careful, obviously. And so we're a media company. We put ideas and information out into the ethos. Our motto is education for effective action. We know that the gap between learning and taking action is often too big for people to bridge. And with our provider network, we try to bring in the people and resources investors need in order to be able to act out on good ideas. Obviously, we do some screening before we bring people into our world. We have conversations. We explain to them our values and expectations. We have all kinds of follow-up mechanisms that allow our listeners to give us real-time feedback. If we get bad feedback, nobody's perfect. We'll look into it. If it turns out to be consistent, a pattern of behavior or something that we think is irreconcilable for whatever reason, then we just part company. And then that's the end of it. We don't go on a big rant. We don't offer really any explanation. I think the important thing for you to know is you're still responsible for your own due diligence. Just because we vet these people for our standards doesn't mean they're going to meet your standards. But obviously, we care about our brand. We care about our reputation. We care about our listeners. And so we make sure that we pick people that we think have offerings that are competitive and useful, and we have relationships and some level of accountability where, hey, we're getting feedback from our listeners, and if our listeners aren't happy, then we need to understand why, and if that's not fixable, then we're going to part company. So yeah, to Robert's point, pretty much everybody in there, I would say, are great people. But we can't guarantee any of them. So just be aware you're responsible for your own due diligence. By the way, if you're out there listening and you've got some really great people in your world that you work with, because we get hit up all the time by people who want to promote their businesses on the show. And I'd say for every 100 people that hit us up and say, hey, I want to promote on your show, we might use 2 or 3. It's just a very tedious process. You don't see a lot of turnover, and that goes back to Robert's point about us really caring about a long-term relationship, and we think trust is built over time. One of the other sayings that we're very fond of is time will either promote you or expose you. We've been around since 1997, broadcasting, podcasting since 2008, I think, or something like that. I think we have some of the longest standing relationships in the business. We're proud of that. You can bet that if someone's been around for a long time, that we're good with them. But if you know somebody out there that you think we need to know, please just use our feedback page or on our provider network page. There's an opportunity to nominate someone to be part of our network. In fact, we're just actually bringing someone on board to help expand and manage that more effectively because there are a lot of needs out there. I think as people look at what happened last year in the stock market and the bond market and is going on with interest rates, and people are looking for alternatives. And I think more money is going to be coming into Wall Street, just like it did after the .com crash. People started looking at real estate. So we're getting ready to beef up our provider network to be able to give all of our listeners more access to more and better providers. So it's a great question, John. I agree with Robert. Thank you so much for asking us and giving us a chance to tell people about the provider network. So you can find it at realestateguysradio.com. Just look under resources.
Thanks, John. Our next question comes from Coleton in Berea, Kentucky. Hello, guys. I'm Coleton. I'm 19 years old, and I'm emailing you about the Young Investors Summit. I'm very interested, was wondering if there are still spots/scholarships available to attend the summit. Thank you, Coleton. All right, Coleton, this is kind of a cool thing that is near and dear to our heart. Our Investor Summit is now in its 21st year. And we're excited that in June, we're going to be back in beautiful Belize for this amazing week plus of just intense relationship building, knowledge, incredible faculty. It's going to be great. For the last many years, we have had a young adults program we now call our Young Investors program, and it's designed for folks that are ages 18 to 25. A bunch of us sat in the room on the last day when we were doing this on a cruise ship, and we had some young people in the audience. Generally kids whose parents were with us, but they were 18 to 25, and they had had such a profound experience that we had this awesome discussion about how do we get more young people to attend the summit. The challenge with the summit is it's expensive. It's $6,000 a person at bare minimum, and that's a lot of money if you're 18 to 25. And we had some of our summiteers step up that day and say, I will sponsor to have some young people here, and then that launched the program. So today, if you're 18 to 25, and there still is some room available, you can sign up to be at the summit for a price that is less than the cost of us putting it on. So an 18 to 25-year-old, why there are spots available, pays $2,500 for the full summit experience. And it's awesome because you're going to have 25 to 30 other young adults to hang out with, plus all the seasoned investors and all the faculty. Now, even though that's a really inexpensive price compared to the value and the cost, it's still a lot of money. So we actually have a scholarship program where folks that are 18 to 25 can apply to get some help.
Yeah, everything's on our website. Go to realestateguysradio.com. Look at the button that says Summit at Sea. Underneath it, there will be a tab that talks about the youth program or young adult or young investor program. It'll be obvious. It'll explain to you exactly how to apply, submit your application, and describe what the program is all about. But yes, I believe there's still room. And if not, then we'll get you on a waiting list. There's no reason not to throw your hat in the ring. If you are someone out there who believes in helping a young, ambitious person get started and put them in a big room with a bunch of big names and big ideas, there's also an opportunity to make a donation to what we now call the Godfather Scholarship Fund, which was named after Robert's father, the late, great Bob Helms, who we quote often on the show. And if you go back in the archives, you'll get a chance to hear a lot of Bob's timeless pearls of wisdom. But you can make a donation there, too. It's not tax deductible, but it is an investment in the future.
And by the way, that's also a great message for parents. If you have kids that are 18 to 25, you should come on the summit, but bring them along at a reduced rate. I sure wish I had started when I was 18 years old instead of buying my first house at 24. It's Ask the Guys, your questions, our answers today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hey, this is David Green, author of Long Distance Real Estate Investing and the Burr Book, and host of the Bigger Pockets podcast. And you are listening to the Real Estate Radio Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, we've just launched something brand new that we're excited about. So before we get to our next Ask the Guys question, we want to invite you to learn more about our investor mentoring program. We have had this on our heart to do a long time. Back in the day when Russ and I met, we put together this program where folks would come geographically where we were in Northern California once a month for 3 hours, and we would talk real estate. We'd have guest speakers, we'd do case studies, and we'd facilitate conversations. It started with just a handful of people in a back room of a title company, and it grew to nearly 1,000 people back in the day. Now, it was all geographically based. We were doing these clubs in only Northern and Southern California, and when the great financial crisis reared its head, we kept the club going, but we quit growing the club because it was not a time when a lot of people wanted to invest in real estate, but they were certainly interested in navigating through the waters of that difficulty, and that's what we did. And now we are finally ready to relaunch this program, and we're super excited about it.
Yeah, and there's some really important reasons why. So if you've listened this far into the show, it's hopefully because you're really interested in great information, and hopefully we've been delivering that for you. But the Investor Mentoring Club originally was just designed to give people a place to get together, to talk real estate, to strategically network. We didn't sell anything. We had a bunch of subject matter experts in there: mortgage, IRAs, tax, 1031 tax deferred exchange, rehabbing, rental properties. The list went on. And it was fantastic. And back in 2002, 2003, when we launched, YouTube wasn't a thing. There wasn't all this stuff out there. And when the financial crisis came, that kind of crushed things, to Robert's point, a little bit. And we realized we could impact more people better by using media. And so we became active on podcasting, and all of a sudden, boom, we're reaching hundreds of thousands, if not millions of people all around the world, which was exciting. But we lost that human touch. Of course, we still do our live events and we get to meet small segments, but we thought, what if there was a way to be able to combine both? So the reason we've decided it's so urgent to get this out right now is Robert and I looked at what was going on in 2022. When we closed out 2022, and we talked about this in last week's show, you've got the stock market down worse than it's been since 2008, and maybe one of the worst since they started keeping track. You've got the bond market, the worst ever. You've got inflation, soaring interest rates. You've got a lot of reasons why people need to be paying attention right now. Plus, there's even more stuff going on related to the dollar and some of the stuff going on geopolitically. And I know from 2008, not paying attention, what can happen when you're not aware. So long story short is we have 6, I think, geographic locations going right now. And the way it works is it's a virtual meeting once a month. And then you go into breakout rooms with your subject matter experts or local club leaders. And then once we get enough people in a specific geography, you'll be able to actually meet in a room like a regular meetup and have conversations. And again, as we've been talking about this entire time, this is a relationship business. You can be on Zoom meetings and you can watch YouTube videos and you can listen to podcasts, but until you get in a room and you start building human relationships with other people who are investing, you're just not going to learn as fast. You're not going to get as connected as well. You're not going to build the levels of trust that you need. Now, this isn't about selling anything. It's just education, ideas, information, and relationship building. But we think it's mission critical right now for Main Street to get connected. And so we're working on that program right now, just kicking it off here in Q1 2023. If you're interested in learning more about it, just send an email to IMC, like Investor Mentoring Club, IMC at realestateguysradio.com, and we will get you the information.
Over the years, a lot of people say, how do I learn more? Where do I go figure out what's happening in my local community? We would always say, hey, go to a club, go to a local RIA, find something, or if you don't have one, start one. The challenge is, having been invited to speak at many of those events over the years, most of them have an agenda. It's not always even a clear agenda. They get you in a room and they're there to sell you something. The real estate guys weren't like that when we did our mentoring club. There was nothing for sale. We never pitched a property. We never sold a big stack of books and tapes or some advanced course. That was not the agenda. The agenda is relationship and camaraderie. And that's the whole idea behind this. So find out more about it. You can attend a virtual meeting and try it on if you will. Or if you're in an area where we have live meetings, attend one of those and meet some cool folks. Just send an email to imc@realestateguysradio.com. Next question today on Ask the Guys comes from Gabe in Litchfield, Minnesota. Hello, I've been a long-time listener and attender of your events. I recently decided to move from self-management to collaborating with a management company for my market rate 1,000 unit portfolio. Congratulations, Gabe. Believing that 2023 will be a huge year of opportunity, this is a strategic move for me. I'm in need of a starting point to find an amazing management company. I can obviously do a Google search, but wondering if you could give me any wisdom or direct. All right, Gabe. Well, I won't say that we have a top 10 list of property managers in Litchfield, but I will say this. There are some really good ways to find an awesome property management team. And the first one I'm going to start with might not be the place that you would think to start, but it is NARPM.org, the National Association of Residential Property Managers. This is a trade association of property managers, and I have found attending these meetings in multiple jurisdictions. In fact, a friend of ours in Dallas, Texas, who you hear on the show from time to time, was a chapter president for a while. The kinds of property management companies that are willing to donate and spend time on education and pay dues to be part of an organization. It doesn't mean they're all great, but it's a great place to start. So that's the National Association of Residential Property Managers. The second and maybe better way to find someone is ask your lender. We talked earlier about a lender in commercial property is going to typically require you to have a strong third-party management company. If you're buying 200 units or 400 units or 1,000 units, you can be sure they're going to require a very tenured third-party management company, and they're in that business. They're going to know a lot of people. And the third thing I would say is just network with other investors who have 1,000 units or more to find out who they use.
Yeah, I think we're assuming here that these are residential properties like houses or residential 1 to 4. So if these are apartments, another resource would be the National Apartment Association. A lot of times they are going to have resources and workshops and places you can go to interact with other people who are active in the space. So that can be another great place. And I think make sure that whatever you do is use a firm that's got some scale. 1,000 is a lot of units, but it's not gigantic from the standpoint of a small firm could make the argument they could handle it, 1 or 2 man operation, but you don't have any redundancy. You don't have much scale with a portfolio that big. If you really want to trust that it's going to be taken care of, you need to make sure that the people who are frontline handling it for you have backup and critical infrastructure. So take a look at that as well.
Thanks for the question, Gabe, and continued success to you. If you want to get in a room full of awesome people that you can ask those kind of questions to, then come on out to the Secrets of Successful Syndication. Happens into March in Dallas, Texas. We're going to have a bunch of awesome folks there, and as much as we love our faculty, and they are great, the most humbling thing is to meet the new folks that come. Over 100 people have never been to one of our events that are coming to this event. We'd love to have you meet them because the Real Estate Guys just have a cool tribe. Hey, big thanks to everyone that had questions today. If you have a question for the Real Estate Guys, just go to the website at realestateguysradio.com and click Ask the Guys. We'll do another one of these shows in a couple of months. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.